JFD, just fair and direct.
Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 11th of January 2021, guys. So, yep, a long time no see. Welcome. Merry Christmas, Happy New Year, guys, and all the everything. If you had any other celebrations, guys, I hope you had a fantastic time. So we're back on track today. I hope you can hear me well. Because of course we do have a bit of a change here, so I'm kind of not really doing this video from my usual spot. So yeah, guys, I hope everything's running smoothly. I hope there are no interruptions. But yeah, guys, as always, before we jump into the charts, first of all, let me quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, guys, so hopefully, like I said, everything's running smoothly because, like I said, I do apologize if there is any interruption in the video because, like I said, I'm not really doing it from my usual spot due to, of course, the whole coronavirus issue, let's call it this way. And yeah, guys, so I hope you'll bear with me. And if you do have any comments, please leave them after the video gets uploaded. I'll pick up on those. I mean, if there's any feedback, and yeah, I mean, I'll try to improve on my video later on today in my Trader's Tea Time. So yeah, guys, as always, before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So once it gets loaded up a little bit, so yep, apologies for a little delays here, but yeah, guys, as always, that's the website that you can always visit. I mean, if you want to have a look at a bit of look at our analysis. Okay, guys, well, once this gets load up, let me just actually, well, you got the picture, basically. Yep, there we go. So, jumping into the charts. Now, the first one I want to pick up here is Nikkei 225. So, first of all, we can see that Nikkei this morning had a fantastic move higher. Let me just quickly refresh the chart because, to be honest, let's have a fresh look on all this. And first of all, we can see that Nikkei, yes, it is traveling higher, but probably for this one, I would need to jump into a monthly chart and just to show you where we are right now. So, as you can see, we are now testing the levels last seen in August of 1990, guys, and also the levels not only August 1990, but also levels here of March and actually more of an April of 1990, guys. So for now, it seems that it's unstoppable. I mean, everything's kind of everything's kind of moving higher here. I mean, I'm talking about the equity markets, and of course, understandable because in a way, it seems that the market doesn't really, or should I say, market participants don't really know where else to put their money into. I mean, if you you've missed out on the crypto world, I mean, yes, I mean that's a bit of a shame. It's a bit too early, probably late to jump in right now. I mean, again, it depends on the view, of course. For now, maybe later on, but here, for example, equities are picking up the pace because, like I said, the investors are looking for places where to put their money into, and for now, the equity world, it seems to be that the more attractive one. So, in a way, if everything continues to be the same as it is right now, I mean, if the pace is still to the upside here, then, well, I mean, the next potential target here could be maybe the low here, the lowest point of May of 1990, which is roughly around the 29,519 zone. Of course, we're keeping an eye on that psychological 30,000 territory, which could be an interesting one to watch. But of course, let's not forget that on the slightly shorter term, from the slightly shorter term perspective, we can see that the price is already a little bit overextended, so maybe a bit of a corrective move lower here could be possible. And we're seeing that, for example, the cash equities right on the US cash equities and the European ones are this morning, for example, they're correcting a little bit lower now, but that could still be seen as a healthy move. So not something to kind of be worried about yet, I would say. But for now, guys, what you could do here is, for example, from the technical side on Nikkei, is keep your eyes first of all on this upside support line drawn from the low of the 19th of March of course 2020. Keep your eyes on that one, because in a way, even if we see a strong reversal back down, as long as the as long as the price remains above this upside line, we'll stay positive. And from even a more shorter term perspective, what you could do here is keep your eyes on this key resistance barrier, which is the kind of marks the highest point of December here, and is near the high of the 4th of January, which is roughly around the 27,600 mark. So in a way, if we see the price reversing back below this area, then yes, we could maybe start being a little bit more careful with the upside. But if the price then drops below this little target, the 27,000 mark, now that's where it could become a little bit more interesting for the sellers from the short-term perspective, of course. And then, yep, we could go even further towards this upside support line, guys. So in a way, like I said, what you could do here, if you're looking at something kind of some lower levels here, well, initially, like I said, wait for a drop below the 27,600 level, and then keep your eyes on this 27,000 mark, because in a way, don't get me wrong, because it could drop below this 27,600, bounce around somewhere around here, find support near this 21-day EMA, and then kind of reverse back to the upside, because we have seen this happening, and as you can see, the 21-day EMA does sometimes provide good support. So yep, something for you guys to keep in mind. In terms of, like I said, the upside, as long as it stays above this 27,600 territory, let's say if it rebounds from it, if it does move lower and then rebounds from it, then my next target is that 29,000, this 29,519 zone, or that psychological 30,000 area. So keep your eyes on that one, guys. Shanghai Composite. So looking at this one, and you can see that this morning the index reversed back down. Look at this perfect kind of hit of this 3,587 territory. Now, before New Year, I talked about Shanghai Composite, and I was saying that my next target here is the this 3,587 zone, especially if we get a pop above this upper bound of the range. So as you can see, we had a nice reversal here, so this worked out well as well. So we had a break of this a rebound from this upside support line drawn from the low of the 19th of March. But then what I was saying that in a way, in order to get a little bit more excited with the upside, we need to see that push above this 3,457 territory right here, which is the upper bound of the range. And you can see we had a beautiful pop above it. We closed above it, and then we continued to rally. So, and we had a perfect test of this 3,587 territory, which like I said, I mentioned previously. Now, in order to understand what that level was here, you can see here that's the highest point of 2018, guys. Of course, we did overshoot that level a little bit, but we're struggling to stay above it. So basically, or should I say, we struggled to stay above it because although the market is still open here on the Shanghai Composite is still open, in a way it's drifting lower right now, so I doubt that it might kind of reverse back to the upside here. So yeah, we'll keep an eye on that one, and for now it's a beautiful correction lower here, so I'll stick to this idea that we could see the index correcting a little bit more to the downside, maybe even traveling back towards this upper bound of the range here, the previous range here, and then maybe rebounding from it. But if it gets broken, if the upper bound of the range gets broken here, then of course all eyes are going to be on this upside support line again. If that fails to provide support, then, well, I mean, lower levels could be met, guys, so be very careful on that one. Now jumping into DAX, with the German index, we can see that first of all, we can see that yes, it closed nicely in the kind of above the level that I talked about previously. This level right here, do apologize for the amount of lines here, this 13,213 zone, which was the opening price of 2020. So we've closed above it, and we stayed above it nicely. So yep, it kind of continued to rally here, and yes, it was a good moment here because we also overcame the highest point of 2020, the previous highest point of 2020. That also managed to happen just kind of during the last trading days of December. The only little issue that it didn't really stay above this area, above the highest point of 2020, the previous highest point of 2020. It did overshoot it, but this highest point of February here kind of still managed to keep the price down, and that level is around the 13,795 zone. So last week we saw a nice rally here. It pushed further north. So first of all, let me just probably clear up the chart here a little bit. We'll have a fresh look on all this. First of all, let's not forget that we are trading above this kind of tentative, a long-term tentative upside support line here, drawn from the low of the 19th of March. We are now, of course, trading above this February highest point of February here, which is roughly around the 13,795 zone. We are now kind of heading towards, and let me just go here into a monthly chart here. Probably that's going to be much easier. So now basically because we are now hitting these all-time highs, guys, in a way it's a little bit tricky here. I mean, in a way the 14,000 mark was reached, so that's great news. The cash index right now is, I think, correcting a little bit lower here. So let me just jump into our MT4 platform, and we can see that, for example, let me just quickly pick up on this. There we go. So yeah, we can see that the price is now back below the 14,000 mark. So in a way, a bit of a retracement here could be possible. Of course, the same story as with Shanghai Composite. So if we look at this daily chart, we can see that yes, there is a possibility for maybe to see this one correcting a little bit lower. But keep your eyes on this 13,907 territory, roughly around here. That's marked by the high of the 4th of January. So if we get a drop below that area, maybe we could go for a bit of a larger correction lower here. However, I will consider that idea and I'll get a little bit more comfortable with that idea if we get a drop below this level here, below the current lowest point of January, which is roughly around the 13,566 territory. So a nice good drop below this area, of course, automatically would also place the price below the 21-day EMA, and yep, more sellers could see this as a good opportunity to step in temporarily and drive this one towards this upside support line. So long story short, guys, for now, keep your eyes on the on this area right here. So keep your eyes on the 13,907 territory here. So, and then yes, we could go from there. We could, like I said, see this one as a good opportunity to step in, and yep, further declines could be possible. So keep your eyes on that one. For now, like I said, if you want to look at some lower levels, guys, here, wait for a drop below the 13,566 zone right here. So now jumping into gold, and gold is quite an interesting one because, well, first of all, let me get rid of all this madness right here because that's from 2020 still. But the most important here that I wanted to pick up here will be this downside resistance line, because although it was violated last week, still last week it wasn't able to kind of stay above it and close above it. As you can see, on Friday we drifted heavily back to the downside here, and yep, ended the week kind of back below this downside lines. Because if we take a look at the weekly chart, you'll see a nice false breakout here. So that's why I'm going to keep this line for now. It's going to be quite interesting to see how it continues to trade in relation to this downside line. For now, the more important thing here is to, of course, keep your eyes on some of the key support and resistance levels. Now, one of the support levels to watch is this 1819 level, marked by the low of the 14th of December, which also coincides with the 200-day EMA here. And yep, a nice good drop below this could, yep, open the door towards lower areas, especially maybe towards this lowest point of November here, near the 17, let's round it up here a little bit, 1765 mark. So at the same time, of course, if we see a drop below this 1819 level, then this would also place the price below the 200-day EMA, guys. So in other words, guys, for now, it's going to be quite an interesting one to watch, especially this level here, this 1819, because in the short run, the idea that I have here, what could happen is maybe we'll see another test of this 1819 level. If it provides, if it continues to provide support for now, we might see a bit of a rebound here, and maybe we could see something like this: a rebound, a push back up, a test of this downside line, and if that one provides good resistance, another slide here could be possible. And then, yep, we could go aim for that lowest point of November. But of course, if this downside line gets broken and we see a pop above the 1907 territory, somewhere around here, now that's where we could start looking at some higher levels. But of course, we'll still be very careful because the more comfortable level to watch probably, and this is a bit of a probably moment, a bit of a more comfortable level to the upside could come on a break of this 1965 territory, marked by the highest point of November. However, I do understand that we could be missing out on a bit of territory, so that's why I have my idea here to the upside, starting from this 1907 zone, somewhere around here, and then yes, we could go for some higher levels. And then, like I said, but I'll aim for this this key resistance area right here, which is the near the 1959 zone and 1965 level, and then we'll take it from there. But for now, of course, the upside scenario is slightly off the table unless it's a small little correction towards this downside line. But for me right now, all eyes are going to be on this 1819 level, because if it gets tested again and if it fails to provide support, then yes, it opens the door to some lower areas. Now jumping into WTI oil. So first of all, let's get rid of all these drawings. A bit of let's put it this way, too much here. Too much. Now looking at this picture, and let me just get this back. There we go. Looking at this picture here, yes, we had a fantastic move to the upside last week. The commodity managed to reach the area here near this 52.72 level. Just kind of fell shy from a few points from reaching this 54.45 level, marked by the highest point of February of last year. And yep, today we're seeing a bit of a corrective move lower. However, this corrective move is considered to be quite a healthy one, because don't forget that we are still trading above this this upside support line here, guys, taken from the low of the 2nd of November. Now, don't get me wrong, this upside line is a little bit of on the tentative side. However, if this upside line gets broken, we would also see the price below the below this 21-day EMA, and then yep, further declines could be possible. So for now, guys, I'm considering a bit of a corrective move lower here. If you're looking for a level for the downside, one of the good ones to watch probably is going to be this the high of the actually this is the that's the highest point of December, 49.29 level. A nice good drop below it may kind of also open the door to some lower areas. Now Bitcoin, okay, talk about madness. Bitcoin here, well, pushed nicely to the upside during the weekend, and well, and of course last week, and almost managed to reach this 42,000 territory. And well, that's of course an interesting one because well, talk about a bit of speculation here. I mean, and by the way, guys, if you remember last year in December, before New Year, I spoke about this idea that if we compare it to what happened here in 2017 and 18, you can see that in December we had a fantastic rally here, and then in January, February, March it started declining. So looking at this picture here, you can see that January we had a nice spike here. Maybe February, and just this is of course maybe, we'll have a nice reversal here back down. But of course, for now, let's not over speculate on this too much. Looking at this this here chart, we can see that in the beginning of this monthly chart, of course, in the beginning of this this month, the price is already drifting lower. However, maybe by the end of the month, we'll somewhere maybe in the middle of the month actually, we'll get back maybe closer to this 37,500 level or something like that, somewhere in between, or maybe even 40,000, and then maybe we'll have a nice correction lower. But again, like I said, for now I'm seeing this as maybe a temporary correction. It could go a little bit lower here. Looking at this picture, maybe you'll find support somewhere near this 21-day EMA and then rebound back to the upside. So be very careful. If it starts dropping below this this hurdle right here, somewhere below the 28,250 zone, somewhere here, then yes, maybe we could go for maybe a larger correction lower. Now, guys, I think I'll have to speed up here a little bit because I'm running out of time. So AUD/JPY, this one had a nice move higher. I talked about this one in my traders tea time last in my last traders tea time for 2020. My target was this 80.72 zone here, so we managed to reach that one perfectly. So now I'm gonna get rid of this all these drawings, and of course I'm gonna keep an eye on this little short-term upside support line, because if that gets broken, guys, now that's where it could become a little bit more interesting for more sellers. But for me, still the level to watch would be, for the downside, of course, the 78.85 zone. A nice good drop below it could open the door towards lower areas. If you want to look at some higher levels, well, at least wait, guys, for a push above the high of last week near the 80.93 zone. USD/JPY also is a very interesting spot here. I talked about this downside line last year, and we're now testing that one. So the big question here is, can we actually overcome it? For now, I'm going to take a bit of a neutral stand on this one because, well, I mean, if equities start pushing lower, maybe there will be an increased yen buying here. So we'll have to be very careful on that one, guys. But for now, if this downside line gets broken, yes, perfect, good news for the buyers. However, just to be a little bit more on the safe side, a push above the 104.76 territory right here could do the trick for more buyers. GBP USD, quick update here. We're pushing lower a little bit. Let's not forget that we're still trading above this upside line here, drawn from the low of the 18th of May. So in a way, this move lower could still be seen as a temporary correction, and we'll take that, of course. And I'll consider lower levels, especially if the price starts dropping below this 1.3483 territory right here. Let me just clear up this chart a little bit, and if we do see a drop below this 34.83 zone, then yes, I'll go for a lower areas here, because at the same time right now at this point in time we're trading below this 21-day EMA, which could also be seen as a little bit of a bearish sign. Euro CHF. So here the pair is trading above this upside support line still. However, we'll be very careful as well on this one. If this upside line gets broken, of course, it increases the chances for a further move lower. But for me to get a little bit more excited with the downside, I need to see a drop below this hurdle here, this 1.0791 level. As you can see, it acted as a fantastic area of support. In order to consider the upside, I would prefer to maybe wait for a push back above this 1.0832 territory, somewhere around here, and then I'll consider these higher levels. But of course, if these get broken now, that could strengthen the upside scenario, and yep, we could push further north. And finally, Euro USD. So this one, similarly to let me just clear up this chart a little bit. Similarly to GBP USD, we are drifting a little bit to the downside here. Dollar is strengthening, of course. Yep, we are below this hurdle here, this key support zone of 1.2210. And we're below the 21-day EMA. So in a way, everything's kind of leaning more towards the downside. So if it remains today below this 21-day EMA, my next target is the 1.2059 zone right here. And then I'll take it from there. But if you want to look at some higher levels, guys, if you want to be comfortable with the upside, well, probably wait for a push above this barrier, the high of last week, near the 1.2350. And then we could take it from there. So, guys, I'll have to wrap it up here. Sorry that I had to rush through this one a little bit.